Corrective is how you would call the afternoon in trade today, because the Nifty has pulled back a little bit, but it is not still diffused the enthusiasm at the broader end of the spectrum, you have to admit. So more than 0.5%, over 0.5% off for the Nifty 50, for the mid caps and small caps, still holding out. The market breadth still in favor of the advances. Look at that, 0.65% for the small cap index as well. And the advance decline ratio will come up on your screen. Started off really well, has narrowed down quite considerably, but still in favor of the greens. India VIX, very quickly before we get to the specific stocks on the Nifty 50, and volatility has largely been ebbed. And in today's session too, nothing dramatic. I mean, at 11, 10.5, 11 won't make too much of a difference. Marginal rise, but lying very, very flat. Bring up the Nifty heat map and show you what's moving, what's not. A bit more red than how we started off. As you can see, a lot more dominant is the red color now relative to the green, but specific stocks have done well, as they would, of course. So Bajaj Finance, I think financials have taken a bit of a backseat. The surprise was IndusInd Bank, really down about 3%. But aside of that, Kotak continues to fall, another 2% gone there. Bajaj Finserv, Bajaj Finance, post-result corrections seen there. Shriram Finance down about 4.5%. So clearly, financials have taken a hit. And you see in the top 10 gainers, there is not a single bank or NBFC in the green. So that's the key point. So financials have taken a hit. SBI, HDFC Life, lending, non-lending, everything is down. What's doing well? Tech Mahindra, 8%. A bit of a lone ranger, I must say. I mean, maybe coupled with LTI. It's not that every other IT name is doing well, but Divi's is the surprise mover, 4% higher. And I dare say some of those names, the CDMO companies, have actually done well in the session today, because Lotus, after not such a great rara call, too, I think recovered from the lows of the day. And maybe doing okay. But Tamanna, the broader end of the spectrum still holding forth. Relatively, yes. But I would say a bout of, and I like the term you use, corrective action coming in there as well compared to how it was through the day. Mid caps are okay. Small caps as well, but yes, a bit of pressure compared to what the market was like, say, a couple of hours ago. Nevertheless, you are seeing, and let's just quickly pull up indices as well before we go into the specific stocks that we're focusing on this afternoon and are making news to see what has really hurt. It is the finance pack. This afternoon is all about Bajaj Finance, which has hurt the market, and you see that in bank, in finance, metal, all of these indices not doing too well. I think Tech M is standalone, really sparkling on the IT ends of things. But let's look at specific stocks. L&T Tech has, had a rough day, and that continues to be in pressure, about 8% down. L&T Tech, disappointing results, and that hit continues. Can I not talk about Spark? Difficult, considering the kind of downward momentum that stock has had consistently. Hutco is the interesting one. Now, a lot of rumors swirling. Let me make it very clear that there's no clear announcement so far, but a lot of rumors that they might be venturing from housing financing to infra financing. Maybe that's what's moving the stock on the street, about 12% up on Hutco. Zensar and UTI AMC, I would put in the category of good results being rewarded by the street. 8.5% up on a Zensar. UTI AMC also had a decent set of numbers, at least on the face of it. The internals up to some questioning perhaps, but 4.5% up on UTI AMC. Piccadilly Agro, I found, was an interesting move. No real visible fresh news flow today. The Indri maker had already done fairly well, but good volumes, and the stock up about 5% there. NLC is the other one that I'll talk about. So this news came in earlier today. The company is commissioning a thermal power plant in Uttar Pradesh. The coal ministry has also approved their coal block, the Pachwara South coal block, with an estimated capital cost of over 2,200 crore rupees. So 6.5% on NLC. But a lot of other, I think, counters in focus as well. But the big breaking news on our screen, sources tell my colleague, okay, big exclusive, NDTV Profit exclusive. Let me qualify it first. It's the big NDTV Profit exclusive. GQG is likely to have bought into Vodafone Idea's block trade today. Smithy Johnson with more details. Smithy, what are you gathering?
Well, yes, there was a block trade today in Vodafone Idea. It seems like ATC, American Tower Company, is the seller in this deal. They held about 2.8% stake in the company, and this is a clean-out deal. So that means they've sold all their stake. It's sold at about 12.7 rupees a share. So the total deal value is somewhere close to 1,800 to 2,000 crores. Now, GQG may be the likely buyer into this deal. Now, remember, GQG had also subscribed to Vodafone Idea's FPO through the anchor book. They had got an allocation of about 25% of the total anchor book, and now 1,800 crores more into Vodafone Idea. And also remember that American Tower Company a month or so back converted its optionally convertible debentures to equity. So that was at about 1,440 crore, and their stake had come to 2.9% into the company after that conversion. And now they have exited Vodafone Idea, and GQG has increased its stake through this deal.
Okay. Thanks for that, Smriti. Smriti, just throwing this out of the dark at you, but any handle? I mean, what? So GQG bought in the FPO. If they add this as well, that's a large stake than they collectively have in Vodafone then.
Definitely. If you look at the number of, look at the stake that they had, it's about 1,300 crore before and about 2,000 crore now. So wow. Over and above 4,500.
That's a large number as well. Okay, Smriti, thanks for putting that into perspective. Vodafone Idea is a bit subdued in trade today, but let's see whether it stays that way post this becoming official. Though, Rajiv Jain is has now made it evident that he likes things related to India infrastructure. Started off with the whole purchases that they did in the Adani group and continued to do. Yeah. But then JSW Energy, GMR Airports. You can argue that telecom is a part of infrastructure as well, because Vodafone is a large bet in the FPO. And if this is true, which seems to be the case, then that as well. So he's clearly putting money into India and into everything related to infrastructure.
You know, I think the jury is still out on what exactly has happened with Vodafone, Niraj, as we are seeing. In terms of, is this FPO and I would say the successful closing of this FPO a turning point in the whole history of Vodafone? And GQG, for one end, is very clear where they stand on that debate, that they are betting positively on Vodafone, that it can sort of come out of that complete dead end that they were stuck in and move forward. Look at over the week, what has happened to that? Okay, about 4% up over the week, but the gyrations, the up and down and the turbulence in that stock is really the story. Even today, you had, it was 8% down at one point. And just let's pull up the intraday chart as well on Vodafone and the kind of day that they have been having. So Vodafone, one stock in focus, but many others to talk about. Tech Mahindra stock of the day, we'll be talking about that as well. Bajaj Finance, what has been happening there? And that seems to have pulled down the entire market really, and bad mood. They're 8% down on a Bajaj Finance. Why is there such concern with numbers that on the face of it were in line? We'll talk about all of that. But meanwhile, Soni Patnaik of JM Financial Services with us today. Richo Kolingam of Economics Research joining us on the show. Welcome to both of you. Great as always to have you on. Soni, let's begin with your call on the indices. Nifty and Bank Nifty.
Hey, good afternoon, Tamanna. Thank you so much for having me on the show. So I think Nifty, it has approached crucial support levels of 22,400, 22,350. In fact, this could be the range where it sees a bounce back. Not much upside, from here, although 22,600. There's a resistance, a minor resistance around 22,600 plus minus 20 points you can take. The moment it crosses that resistance, you can see it going further northwards towards 22,800 level. So I think it's a good, good support right now just to enter and initiate a longs for a short-term trading perspective, keeping a stop loss of 22,250 and a target of 22,600 as a first target. If once it crosses the resistance, you can see 22,800 also coming in. Talking about Bank Nifty is just at its support, very strong. It has also seen good rollovers on the short squeeze side. So I think, the shorts are just getting squeezed out of Bank Nifty system, and 48,000 is acting as a very strong support. So keeping a stop loss of 48,000 from short-term perspective, one can just enter longs at current level, and a target of 48,600, 49,000 can again be seen in Bank Nifty.
And let's just get your picks of this afternoon, Soni. What are your top bets?
So the first would be in City Union Bank. We're seeing a fresh breakout in City Union Bank above 160 plus. You can see very good positions getting added to it on the longer side. So from current levels, one can buy, keeping a stop loss of 158 and a target of 166 and 170 as the targets. So it's a first pick. The second pick can be in DLF. DLF, real estate. We've seen good rollovers taking place from the April to March, May CDs, and it is also giving a good option chain breakout above 900. So from current levels, one can buy DLF, keeping a stop loss of 895 and a target of 930.
Okay, G. Chokalingam joins us as well on the fundamentals. Mr. Chokalingam, thanks for joining in. At the outset, two things that want to talk to you. Shriram Finance, the numbers that have come out, PAT is up about 49%, but it's slightly below what the Bloomberg estimates were. Similarly on the other aspects too. And the stock, after having corrected 4%, has bounced back because the street seems to like the growth here. What is your sense about this one if you track Shriram Finance?
Yeah, I used to track, quite intensively. It never failed on medium to long-term growth at all. I mean, and also the stock is not as costly as some of the peers in the industry like Bajaj Finance. So therefore, I would suggest that one can hold. If there is any further correction, one can add Shriram Finance.
So this 49% growth is something that enthuses you? I mean, or do these numbers leave a bit to be desired? You'll be happy with the growth numbers? They are, mind you, it's 49% growth, but slightly below what Bloomberg was estimating.
Yeah, but I normally do not worry much about being below industry estimate. But absolute growth is definitely very impressive compared to many banks and NBFCs.
Okay. Mr. Chokalingam, the other question is on Vodafone Idea. We've just broken this story. It's an NDTV Profit exclusive that GQG likely is a buyer on the Vodafone Idea stake that ATC would have sold out, likely. Now, that's a marquee name now showing evident interest, but it's not just GQG. A clutch of other money bags have put in the money there in the Vodafone FPO as well. Do you like what's happening with Vodafone Idea?
I have analyzed it. There are two issues which are bothering me. One is that if you look at EV to EBITDA, it is substantial premium to leaders like Bharti Airtel, so which I am not able to understand. And second, after all these dilution of equity, the size of the equity would be more than the annual sales. So which means as and when it turns around, the EPS would be few paisa. So still one can hold on tactically because a lot of powerful institutions are buying the stock. So tactical opportunity could be there. Even fundamentally, if at all either the stakeholder or the lenders decide to restructure the balance sheet in terms of contracting the size of the debt or equity, then it can give a phenomenal return. Otherwise, I do not expect significant return from Vodafone.
Okay, so that's the interesting thing. I mean, Niraj, I think every analyst we've spoken to in the last 3 days has been ambivalent on going out and saying great things are going to happen in Vodafone. We should ask Rajiv Jain.
Yeah, I was about to say that.
Because he's putting his money where his mouth is, or at least, action more than talk. He's putting his money in and he's betting on Vodafone.
And a lot of money.
And a lot of money. No chump change there. All right, the other stock this afternoon, and I would say stock of the day is TechM. What's happened with TechM today is also, I think, underlines once again something you see very often. Sometimes it's not just about the numbers you see, it's about the confidence that the management exudes. And I think with Tech Mahindra, it's about, their Mohit Joshi's outlook on what he sees happening, what his plan is, and how he's going to sort of turn around the company, because the numbers weren't great. Guidance was there, fine, but what really brings faith in that guidance? That really is the question. But nevertheless, Rucha has all the details of what it was from that positive commentary that has the street so excited.
Tech Mahindra reported its results last evening. While the numbers were quite in line with the estimates, what is interesting is the 3-year turnaround strategy given by the new CEO Mohit Joshi. Now here are 4 key highlights from the turnaround strategy. The company expects to to report a revenue higher than its industry peers over the next couple of quarters until FY27. Now in terms of EBIT margin, they also aim to clock a more than 15% EBIT margin by FY27 from the current levels of 6.5%. In terms of ROCE, the company aims to clock a 30% target for the return on capital employed. And lastly, in terms of capital return to the shareholders, it aims to give out 85% of the free cash flow to the shareholders in terms of dividends or buyback.
All right, so TechM is an interesting story there. G. Chokalingam, how did you react when you saw the opening on TechM, and did you really feel that kind of comfort with the management's guidance and the outlook?
No, I've been tracking, Mr. Anand Mahindra, entire good company. Definitely, there is a lot of respect for whatever they say, but despite that, I have my own doubt because the whole industry is growing in dollar term anywhere from 2 to 3%. The IT service exports, and this company also has seen about 6% fall in the revenue on year-on-year basis, that too in rupee term. And if you look at the profit before tax, it is down about 38% year-on-year. So when the industry headwinds are there, and the company also, relatively performing much below the peers, I am a bit surprised, to see their confidence. I hope they become right, but I find it very difficult to, accept this level of confidence and reward the stock 8% higher after such a poor results.
So, that kind of, I would say, careful reading of it is not something that the street has seen. The stock is up, yeah, you're right, 8% without a real great set of numbers, but confidence, maybe time being given to the new top boss to really make some of those things happen. Soni Patnaik, your take on a TechM, would you book profits at this level, or do you see more scope?
Tamanna, from the entire derivative view, we can see that a technology sector has seen quite weak rollovers. This is the second series in a row. Although today it did cross above 1300, but it's not able to sustain, and the closing is also coming below 1300. So until and unless it does not recross 1300, 1310 from current levels, and just show that sustenance above those resistance, it'll be a sell on rise kind of a stock, and it can retest its lowest support levels of 1250, 1220 at the moment. So one may just avoid buying into the stock and just wait for the resistance to cross. On the other hand, if somebody has to go short from current levels, can keep a stop loss of 1300 and a target of 1250, 1220 can be seen.
All right, that's the call on a TechM. Time for a very quick break, but I think if we had 2 contenders for stock of the day, TechM would be at one end and Bajaj Finance on the other. What has upset the street about Bajaj Finance when the numbers are on the face of it in line? Why is 7-8% down today? We come back with all of those details after the break. welcome back. You're watching India Market Close. All right, let's talk about Bajaj Finance. So Bajaj Finance numbers seemed largely in line. And if you looked at what the brokerage note said this morning before markets opened, it was fairly positive considering that despite regulatory pressure that came in last quarter with the RBI's rules impacting Bajaj Finance in various ways, they had still done fairly decently. Despite that, post-reporting its Q4 numbers, you've seen the stock really crack today and a fair bit. Harsh joins us with the reasons why.
What you're actually seeing is numbers broadly in line with what estimates were, but the disappointment has come with regard to the commentary. 4 key pieces, we'll try to break that down. 26 to 28% FY25 growth number, that's what has been given as a guidance. But what Bajaj Finance has done in FY24 is 34% growth. So essentially they've trimmed down growth estimates by quite a bit for FY25. One led by their rural B2C business, which is facing some problems with regard to asset quality, but that's just 6% of the business. And therefore that number seems to be putting investors off. The other piece is also with regard to its customer count. Customer count has grown by around 1.4 crore customers plus in FY24 itself, but they've given a 1.2 to 1.4 crore customer count increase for FY25. That's the guidance they've put out. That's below 20%. They've never done below 20% in terms of customer count. So that's the other piece which is a bit of a put off. The third piece is with regard to asset quality. Now, their credit cost for FY24 was roughly 160 to 165 basis points, 1.6 to 1.65%. Now they've guided for a 1.75 to 1.85% credit cost guidance. While this is normalized, but nonetheless, it's put the street off with regard to credit costs. Last off, it's with regard to margins and profitability. Now, margins have already shrunk in FY24. A further shrink is expected in FY25 by 30 to 40 bips. What the company is saying is they're doing more secured business, which will shrink margins and impact margins and therefore impact profitability. Will the metrics really change significantly as a result of this? Of course, need to wait and watch in FY25, but that's what the guidance says, which is putting off investors.
Those were the 4 reasons that Harsh laid out that was putting off investors. G. Chokalingam, let me come to you first. Are any of those reasons something that you see where Bajaj Finance deserves the kind of knock that it's facing today?
I agree. I think it is unavoidable because, there are 2-3 factors. One, if you look at banking and financial sector, despite a solid growth in the industry, we are seeing a very significant valuation multiple contraction, in both the NBFCs and banking space. And here, after this such a fall, also Bajaj Finance is trading up to 5.5 times price to adjusted book value, and the profit has grown on year-on-year basis 21%. So when the profit growth has come down drastically in the last few years at around 21%, so I wonder whether 5.5 times price to adjusted book value even after the fall is sustainable in the short to medium term. And also till election results are out, I believe the FIs are likely to remain net seller because historically, whenever there is a general election, they don't go aggressive. In fact, they become cautious and they don't mind paying some premium post-election. So this stock also, significantly owned by FIs, and retail investors are chasing only the small and mid-cap stocks. So they are considering all these facts. I believe there is a little more room for further correction in the Bajaj Finance stock.
Sony, is Bajaj Finance showing opportunity to buy at this point, or you would wait to see what happens next?
It makes sense to wait. It's given a very bad breakdown on charts as well as on derivatives data. 6,800 is a very strong resistance now. And on the downside, it can test 6,500 as well. So I think one should just wait wait and watch instead of reinitiating any longs at current level.
All right. So that's the story on Bajaj Finance. A bit of pain there in store for what has happened. The fifth reason maybe is also valuation. We talked about 4 reasons as far as the numbers are concerned, but the stock has run up a fair bit. All right, another stock that has run up a fair bit and is going to report numbers later today is Maruti Suzuki. Its March quarter numbers will be out a little after markets close. And what is expected? Puneet joins us with those brokerage notes and what the expectations are. Yes, Puneet.
Yes, Tamanna. So expecting a really strong quarter from Maruti. They are expecting a revenue, as per Bloomberg estimates, they are expecting a revenue to rise roughly 25% compared to the previous year, while EBITDA is going to be up 47% compared to previous years. They're expecting the margins to come roughly at 12.8%, which is a 190 basis point rise from the previous year, while on the net profit basis, it is likely to rise roughly 46%, coming at a roughly 3,839 crores. Now there are brokerage views on the on expectations. While most have said that the revenue growth is going to be upwards of 20%, Axis Securities has said that according to because of the better product mix, they are expecting an higher SUV sales. They are expecting the margins to be higher by roughly 300 basis points, while ICICI Securities has expected the EBITDA to go up by roughly 50%. They have currently an ad rating worth 11,200 as the target price. Finally, on Citi, they have said a very interesting thing, that they are also expecting revenue growth, but the share of small cars will be higher compared to the previous quarter. So margins will be a key monitorable year for Maruti Suzuki. They are also saying that higher operating leverage benefits will be also giving a positive boost to the margins, but small car share will be a key monitorable, as well as commentary on the same. Back to you.
All right. Meanwhile, please look at the numbers on your screen. Motilal Oswal. You know, I had to look twice, Niraj, to see if I'm reading that right. Net profit at 516 crores versus 90 crores year on year. Look at that intraday. The stock is also spiking. Total income at 1490 crores versus 631 crores. If there's any sector to be in right now,
capital markets.
It's capital markets. No doubt. Aap sabhi ka pyar.
Yeah, it's just the number of customers coming into them.
Boosting the space,
It's quite stunning, really, what's happened to these numbers. And the intraday of the stock should come up on your screen. And remember, by the way, Tamanna is right, because it's not just today's move, today's spike notwithstanding. You look at the last 1 month, and you will see the PR on the stock. I mean, these guys have had a really strong run the last few times.
Wow.
Look at 1 month performance, 55%. Mr. Chokalingam, before we thank you, a quick word on what you see in terms of numbers. 516 crores versus 90 crores as a PAT for Motilal Oswal Financial Services.
I mean, that's great. I mean, the market cap is 38,000 crore. In the last 10 years, the way they created a business and wealth is phenomenal. I think, I agree with your team also that, they are in the right business now. And I think it is going to boom next 4 to 5 years or so. Therefore, one can continue to hold on Motilal Oswal.
Got it. Okay, Mr. Chokalingam, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Before we take that break, though, Sony, have to ask you these capital market stocks. Motilal Oswal, case in point. UTI AMC has had a decent run. Angel One for the last few days has had a really good run as well. What do you like, if anything?
There's so many stocks to track. I think I can just look at Motilal Oswal on the chart right now. And of course, the stock has given a good breakout on charts. You can see it has crossed above the resistance of 2300, 2400. I think the stock can, test 2700 in the coming days. The support is rising. As of now, you can see very crucial support around 2540, 2550 acting as a support. As long as the support is holding, you can see 2700 on charts.
Bonus share has also been announced in the ratio of 3:1. So Motilal Oswal. Sony, nothing else in this segment that you are tracking or you like very, you're seeing with an up move. UTI AMC numbers came out yesterday. That stock has been doing as well, and a whole host of others actually in that space.
Tamanna, UTI AMC, I wouldn't put my finger on it right now. I think on charts, we can see that it has succumbed to some sort of selling pressure from higher levels of 1,000, 1,005, which is also acting as a good support. Of course, the resistance, the support is still intact around 960, 965. Now, if it's able to hold this level, then there could be some bounce back again towards 990. However, if it breaks the support of 960, 65, you can see it some sort of profit booking taking place towards 930.
Right, very quick break. But on the other side, we tell you what's happening in the F&O space. Keep your eye on all the BTST calls, which will also come up after the short break. Stay tuned.
Well, back with India Market Close right here on NDTV Profit. Before we move any further, let's get in my colleague Agam to talk about the derivative cues on day one of the new series. Agam, is there some definitive trend or at all?
Well, actually, it's been a very, very quiet Friday, Niraj. And in fact, we've started to see a little bit of a downtrend play out. This is despite the fact that it was a very strong Thursday. At the moment, while we are looking at weakness, sure, we are also losing out on the 22,500 mark on the Nifty. I reckon that this is largely profit taking coming through and nothing more. As we move into a new week, we are going to start seeing fresher positions out there, and which is why you're starting to see unwinding once again as far as the Nifty futures go. This is long unwinding. Remember that yesterday we did have a strong day of trade. The Bank Nifty, again, let's pull that up, and this is where we're seeing unwinding coming through as well. Again, we're holding on to the 48,200 mark at the moment, but unwinding of nearly 3% in that May futures too. As far as the option market is concerned, when it comes to your overall options, today we did see a little bit of varied writing, puts being written around 22,000, 22,100, and calls being written around 22,600, 22,700 strikes. But in terms of your overall open interest distribution picture, Max OI currently with the 22,600 call and the 22,500 put, which is showing a little bit of consolidation, but this will likely change as we move into the next few weeks. Remember that next week is a truncated week, and we will have Wednesday as a holiday, which means that we will have one less trading day, at least as far as your expiries, your weekly options expiries are concerned. Let's move on and talk about the stocks then. And again, we saw shorts in L&T Tech down 8% at the moment. Bajaj Finance is down another 8%. So a lot of shorts there as well. Bajaj Finserv as well down around 3.5%. Longs for Hindustan Copper and Sun TV. And on the other hand, short covering for Coromandel, Havells, Divi's Laboratories and JK Cement, looking at a little bit of longest unwinding for Balkrishna Industries, but say for that short covering otherwise. All in all, it's a mixed day of trade, and I reckon that it will continue to be about earnings in this upcoming week as well.
Absolutely. Thank you for that, Agam. It is definitely going to be all about the earnings. And I'm just looking at, some of the Nifty top losers and the earnings plate completely being seen there. Nestle did okay after its earnings, but pulled back over there, down about 3.5%. In IndusInd Bank is also hurting. Those numbers were also in line, of course, not as much as a Bajaj Finance, and HCL Tech ahead of its numbers also down. Sony, just your take on IndusInd and HCL Tech if you're tracking. Kotak Mahindra Bank, by the way, after being, sabse bada loser corn mein, the front runner yesterday, is doing okay today, 2% down, but not as bad, of course, as yesterday. Sony, IndusInd and HCL Tech?
Tamanna, in this end, we can see a bearish engulfing candle pattern on daily charts. It is also breaking 200 EMA as we speak. So 1460 is a resistance for now. If it's not able to close above 1460, you can see it heading towards lower support of 1400. So the stock can continue to see some more selling pressure. If we talk about HCL Tech, the stock has seen a lot of short rollovers on the short side from April to May series. The stock is also witnessing a bearish engulfing candle pattern on daily charts for now. From current levels, you can see it heading lower towards 1400 as a support. So I think that's the level that it can test. Maybe from those levels, it can see a bounce back. But as of now, it's weak and 1500 holds a good resistance.
Okay. That's a story on IndusInd and on HCL Tech, but we were talking about what is happening in the AMC space, and I just want to pull up and look at the Motilal Oswal stock once again and see what's happening there. And it's paired a bit after that huge spike up, but nevertheless 5% up. Let's pull up MCX as well. MCX also had been doing fairly well. Not too badly, and it's come off some of those levels as we speak. The other one, which I was very curious about, Sony, and wanted your view, was Biocon. Now, on the 17th of April, there was news that they had entered a completely new market with semaglutide, that is your now very famous Ozempic, Wegovy weight loss wala drug. But since then, the Biocon stock has been on a tear, even today up about 5%. Are you seeing a further upside here, Sony?
Definitely. I think, Tamanna, if we can look at the charts and the option chain, it has given a good breakout, in fact. So above 300 is a good breakout in Biocon. So as long as it closes above 300 on a weekly closing, that will be today, the stock can head to higher towards 325, 330 levels also as this.
Okay, now amongst other leaders in this session, or rather this week, is Tejas Networks. The results came in a couple of days back. Ahead of the results, the stock was up 16%. On the day of the results, the stock was up 20%. On the day post results, it was up 20%. We all know that the results are good. The question is what's next? And I think we can almost call this series Decode, or this session Decode. My colleague Rucha joins in to decode what could be the numbers like in Tejas Networks and the way ahead. Rucha, take it away.
Thanks, Niraj. So as rightly stated, FY24 revenues were up 168%, while the company turned PAT positive as well. Now, looking ahead in FY25, the street estimates that the FY25 revenue will grow up by 4x during the entire year. Now, this is on the back of three major points. Number one, ramp up of the BSNL deal win, which is expected to be executed over FY25. Secondly, company may get over 100 crore PLI incentives, which is expected to be beneficial to the company over the next 5 years. And the BharatNet tender may also be executed. That is what the management also said. Now, because of this, the EBIT margin could also move up from 1.1% at the current levels to 21% in FY25. Now, the other growth levers can be seen as revenues from group companies like Tata Communications and TCS. Future deal pipelines from BSNL as they roll out 5G networks can also be beneficial to Tejas Networks, and the recent acquisitions done by the company will also turn out to be complementary, as the company does not have a satellite and broadcast portfolio currently, which can be helpful from such acquisitions. Now, lastly, coming to what the street is estimating, especially the MK House has a buy recommendation of the stock, and its target price has met with the current market price. Now, let us look at what are the risk factors in this stock. After the BSNL deal ramp up in FY25, what will constitute in the deal pipeline is what is to be watched out for. While EV/EBITDA multiple for FY26 is at 11.5 times, which is higher than FY25 multiple. So that is again another risk level for the company.
Just one quick follow-up question out there, Rucha. Are you saying that for the year FY26, the pace of growth and the quantum of growth will come off relative to what they have done in FY25 or FY24?
That's correct, because FY25 revenue is largely on the back of the ramp up of BSNL deal, which is completely expected to be executed in the FY25. So another risk here, as I mentioned, is what will drive the revenue in FY26 is what is to be watched out for. So the estimates on the street are like a strong growth in FY25, but a little bit of slower or muted growth in FY26. Unless they announce some great deal wins in the next year or the next quarter, I think that'll be a good lever for the company going ahead.
That's interesting information, and thanks for that, Rucha. And maybe viewers, that explains why the stock, despite having such a phenomenal growth target for FY25, trades at the valuation multiples that it does. It's not scorching ahead in any fashion whatsoever on multiples, because FY25 will be a great growth year, but they will actually see degrowth in FY26.
Well, having said that, it's come off last couple of days, Niraj, but it's also run up a fair bit.
Yeah, but just look, just the numbers, the valuations even after that on FY25.
Not that great.
Yeah.
One would argue then there is more room for growth if you have a longer term view. But anyway,
if they grow.
If they grow at the same pace. Either way, that was, thank you for that, Rucha. Let me go across now to Nitin Raheja, Executive Director, Head Discretionary Equities at Julius Baer, joining us this afternoon. Nitin, welcome. Always great to have you on the show. Let's begin with your take on, and I just want to go back because this astonishing kind of numbers and reaction which has come in on two sets of companies, I would say, or two counters specifically. Tech M is one and Bajaj Finance is the other. And I'd like to know your view on both of them, because the way the street has responded doesn't seem to be completely in line with at least the first read of the numbers that the companies put out this quarter.
Look, we have this phenomena of what we call as a hope trade that plays out, correct? And we are seeing that happen in one of the companies because, you have a new management and a CEO who is putting out his own vision and game plan for the company. And I think a lot of that is what the street is looking at and building into it. And that's why, we see what we are seeing out there. In terms of the other element, and that's a classic risk that we see in markets today, and that's got to do with the fact that if you pay very high valuations and leave virtually no room for error, even the slightest of disappointment gets sold into. And again, that's another example that we are seeing, as far as both the companies that you mentioned.
All right, so that's the story there. Just, Nitin, want to get your take on the IT pack as well. We've had, I think, most of the numbers are out, top line and mid-level companies. And we have seen, I think more optimism coming in from the commentary than what the street has rewarded the sector with. Do you think that with the kind of US GDP numbers that we've seen, the uncertainty with the Fed cuts, this is still going to be a tough space to navigate over the next few months?
Clearly, if you look at the commentary that is coming around from most of the IT players, while they're seeing robustness in terms of order wins, at the same time, there is also enough of order deferments that is happening, order renegotiations that is happening for all the players out there, as everybody is looking at. It's not that IT spend is going to sort of go away. It's just that the present trend of uncertainty is making a lot of companies who would have spent, and IT is also a discretionary spend. So companies who have a large amount of discretionary IT spend as a part of their order book are clearly struggling more than the others as such. So I think from an IT perspective, I think this sector is going to see muted sort of performance in the short term. However, very interestingly, if you go back last 4-5 years, during the course of the year, the sector actually moves up on promise of the future. So I wouldn't be surprised where, if the US economy continues to be robust, somewhere during the middle of the year, you once again, and we've seen that trend in the last many years, where again, people look at these stocks, they look at the valuations, they look at the kind of cash flows that these companies generate, and see, well, okay, now we could start seeing a turnaround in the sector and start discounting it. So it's become like a rotational play that takes place in IT, time and again every year.
Nitin, good afternoon. Niraj here. Just hi, good to be talking to you. It's been a while. The mid-sized tech companies, all which have counted numbers, have spoken at length about how they might have to forego a little bit of margins if they want to get growth. We saw that with Persistent, we saw that with LTTS, likely with Emphasis. Would these be on the avoid list until growth definitively comes back, or are you happy to selectively bottom fish? Nitin, are you there? Okay, I think we've just lost that. Nevertheless, we'll get back to Nitin in a bit. In fact, it's about time. I mean, near about closing time. Maybe we should try and take in closing strategies in a couple of active stock ideas from Soni Patnaik before we talk fundas. So, Soni, 2 or 3 questions to you. First, let me start off with the closing strategies. Is there a BTST or an STBT that you have for our viewers?
Definitely, Niraj. It'll be a BTST. I think the market is just at the support, and it should be holding this level. So the BTST comes in for BHEL. That's looking quite strong, and it has given a fresh breakout above 273 to 72 levels. Plus, it has also seen good rollovers, capital good, entire sector quite strong rollovers to May series. So from current levels, one can buy, keeping a stop loss of 270 and a target of 286 to 88.
Okay, so BHEL is the first one on Sony's radar. Sony, I was trying to look at stocks wherein there is both price and volume action in the session today. Hutco fits that list very, very well. Both price and volumes have been up. Havells is the other one, and GMR Infra is the third one. Have you looked at the charts of any of these three?
Yes, definitely. I think all the 3 charts looking quite strong. But of course, when you asked me for the BTST, I had 2 stocks in mind. The second stock was in fact Havells. And, it has given a very strong breakout above 1600 plus. There's a good short covering coming in for Havells today. I think the stock can also be treated as a good buy from current levels. And from BTST perspective also, it's looking quite strong. There's good volumes, and the stock is holding above 1620, which is a very crucial support. So keep a stop loss of 1620, and the stock can head towards 1660, 1680.
Okay, I'll watch out for this as well. So interesting names out there. In some sense preempted what Sony was trying to recommend with regards to Havells, but very interesting price volume actions being seen here. GMR Infra is the other one which has got a solid price action. One more name where GQG is invested in. But Nitin, if we have you back, I was trying to ask you about mid-cap IT. Would you bottom fish or would you stay away from the pack?
No, I think, mid-cap IT is an interesting space to be. So some of them are actually seeing good growth in their specific domain areas. And I think once, spending does come back, I would believe that mid-cap IT would probably do better than large-cap ITs, at least in the as the IT spend start coming back in the initial phase.
Just one stock I wanted your view on is Hutco. Sony, I think Niraj mentioned it, but phenomenal moves this afternoon coming in on a Hutco and a Westlife Food as well. Anything that you're seeing exciting happening here?
So definitely, I think Hutco is looking quite strong, and even today it has seen a very good breakout on charts as well, and stock is already up by 12-13%. The immediate support for Hutco can be seen around 218, 216. That zone is very important. As long as it's holding that zone, the stock can head higher towards 240, 245. And if we talk about Westlife on the charts, we can see that some good breakout has come on the intraday charts for Westlife, which is backed with good volumes. The stock is also up by 7 to 8%, and as long as it's holding above 860, which is a good support, the stock can head higher towards 920.
All right, so that's the story with Hutco and Westlife. ICICI Bank is also on our radar. They're set out to put out its March quarter numbers tomorrow. Harsh is joining us with the key factors to watch out for. Yes, Harsh.
Well, to start off with, Tamanna, it's going to be the margin number which is going to hold the key when it comes to ICICI Bank. You're expecting a 5 to 10 basis point decline. At least that's what broadly analysts are expecting. But anything like Axis, where maybe a 5 basis point improvement or even a few basis points or even flat margins could actually change the numbers quite substantially when it comes to ICICI Bank, and we'd see possibly a reaction on Monday to that. The other piece is, of course, with regard to growth, 18% growth expected on the loans front, retail SME to be looked at. That slippages number any kind of commentary with regard to how asset quality is shaping up will also hold the key. The other piece when it comes to ICICI will also be with regard to subsidiaries and how that performance and how that is being assessed, especially ICICI Securities, where that reverse merger is at play. Keep your eye out on that. The deposit growth number also expected to pretty much be in line with loan growth. Anything short of that will again possibly be a slight negative.
So ICICI Bank is one that will be in focus. Of course, those numbers will come out only over the weekend, and you'll see that reaction on Monday, if at all. Quick take on ICICI Bank, Soni, before we close for this afternoon.
So ICICI Bank, one of the few private bank sectors stocks which has actually seen good rollovers. The stock is still holding above 1100. If it closes above it for today on a weekly basis, the stock can head higher towards 1150. One can just continue to hold the stock. There's good support, but immediately as of now, 1090 is a good support. If it breaks 1090, then it will be difficult to test 1150 on an immediate basis. There could be some sideways trend between 1080 to 1100 in that case. But as of now, 1090 looks quite robust. If it holds, 1150 can be seen.
Okay, well, we'll watch out for that. Nitin, before we thank you, if you've not spoken about private banks, it's been a mixed bag of sorts thus far. What's your sense about picking and choosing between the private banks? And do you like that space at large?
Look, I think you know the kind of weightage that banks enjoy. And the kind of correction that we have seen as far as the banking sector is concerned with regard to where they've traded at long term historically and how they've come down. I think the fear in most people's minds has got to do with two things, right? One is NIM compression, and the second is the impact that, as well as slowing credit growth, given the fact that deposit growth has lagged in the economy. I think a lot of it, if you ask me, has already been built out. Current valuations are very well attractively placed. I think, but what we will see is also very interestingly, in this benign environment of credit, where credit costs are low, the tier 2 banks where valuations have been cheaper have actually done far better than the top tier bank, and we've seen a narrowing of the valuation gap take place out there. I think that trend will continue. But we think overall, if you ask us, the private sector banking space is attractive and is cheap. I think it suffers from the fact that it's an over-owned sector, and we've seen a lot of selling happen on the part of foreigners who've actually over-owned the sector for a very long time. I think most of that, is now behind us, and I would believe that over the next 1 year, it's a space which should do well.
All right, Nitin, thank you so much for joining us today. Soni, great to have you on the show as well. Just last call, Soni, before I let you go. Dixon Tech having a fabulous day as well. A stock which has already run up a fair bit. Do you think there is more of an up move here, if you can still hear me?
Definitely, Tamanna. Very strong, very good breakout, very good strong rollovers as well. The stock on an entire positional basis can test 9,000 also in May series. The stock is looking quite strong, and there's a good support around 8,200. So as long as 8,200 is holding, it can test 9,000.
Okay, so Dixon Tech is, a good call over there. Just wanted to know if you would be bullish on something like a Nestle or an HUL right now, or is that a space that you'd stay away from?
Completely stay away from. FMCG pack for 2 series straight away. They've shown weak rollovers. Individually also, neither of the stocks can give a good breakout or sustain above any particular resistance level. If we talk about Nestle, very bad breakdown that can be seen, or sort of a bearish engulfing candle pattern. There's a support of 2470. If it breaks, you can see it further retesting lower levels of 2400. Short covering can only be seen above 2600 for the stock.
All right, Soni, we'll leave it at that. Have a great weekend. Thanks so much for your time and your ideas. Really appreciate that.
Thank you.
And let's start wrapping up the markets. 2 minutes left for the markets to shut shop. We are okay. We are not closing at the lowest point of the day. A few points shy from there, if you will, really. But the larger point is that it's not a very large pullback in the session. And Nifty Bank is down, yes. IT is down. But the mid caps and small caps have done reasonably okay. Sorry, Nifty IT is up because of Tech Mahindra. Other IT stocks are down. But the mid caps and small caps have done well. 0.8% for the mid cap index, the small cap index too, about 0.4%. So the breadth has stayed reasonably okay, if you will. Now let's get the heat map up on the screen on the Nifty 50. Out there, the breadth, pretty okay. What's correcting? Well, the same set of stocks, no changes there. Nestle is only worsened a little bit, but IndusInd, Finserv and Finance take the cake. Shriram Finance has moved out from the list of the top 10 losers and has moved to the gainers. In fact, it'll be lovely. We'll do it at the end of this thing to pull up the intraday of Shriram Finance. But look at Divi's Lab too, 4.5 or 5% higher for that one. LTI up 3.5%, and it's a bit of a surprise really to me. Today on IT calls, on IT stocks, we're not able to quite gauge what the impact will be. LTTS has the sharp fall, emphasis hasn't. LTI Mindtree hasn't. A good move there for that one. Bajaj Auto up 2.5%, BPCL up 1%. And just before I hand it over to Tamanna, bring up the intraday of Shriram Finance for you. The stock ahead of the numbers was down, and then it perked up in trade. So this is what I'm talking about. I think it moved up, but it was really flattish to marginally lower, and from there, or rather it was down 4%, and now Shriram Finance is up about 1%. So good, very solid intraday move, Tamanna, that came in for Shriram Finance.
Shriram Finance, definitely, but I want to talk about some of the sharp winners towards close, and we should pull up the S&P BSE 500 top gainers, some that come to mind. Hutco, what an afternoon Hutco has had, 12% up over there. Zensar Tech again, good numbers. Techem, of course, no surprises over there. Westlife has shot up. Concor has had a great day. On the losing side, a CSB Bank on the back of numbers, as well as a KSB. Margins have been below expectations as far as KSB is concerned, and that's why you're seeing that spot of weakness there. Bajaj Finance and L&T Tech, of course. Bajaj Finance bruised badly, but some others that I'd like to point out. Let's pull up the Motilal Oswal stock and the intraday chart. A phenomenal set of numbers, and we'll hope to have a detailed conversation with the management come Monday. But of course, cooled off from its spike. If you look at the intraday over there, hit a day's high of 2678 and then came off. But that entire space, capital market space, really you can periscope it in the kind of movement you've seen in a Motilal Oswal. I think the other one segment that we should quickly talk about is pharma, and yes, Divi's Lab did see that big spike up, but if you pull up the Nifty Pharma and its components, Biocon, since the 17th of April, that stock is up 15%, another 6% up today. Laurus Labs turning around. So you had some good moves over there in the pharma pack as well. I think we'll wait to see what happens with ICICI Bank. ICICI Bank, Maruti are going to be the big ones to watch out for Monday.
Most certainly, and it'll be an exciting week as well. A truncated one, but an exciting one nevertheless. Ahead of the numbers, some of the stocks have tempered down. It'll be really interesting. 5 banks, by the way, tomorrow rather. So it'll be an exciting one as well. But we'll save the excitement for Monday. For right now, we've closed the market. From Tamanna, me and the team that has put this show together, thanks so much for tuning in.